Guys, welcome to my channel, the Nigeria Trading Tutorial channel. If you are new to this channel, please subscribe, leave a like, share, support. Without that, thank you. Let's head in the video. Right, today I'm going to be talking about the relative strength index. Now, if you don't know how to add a relative strength index, go to your indicator settings here. Indicator settings. Using an MT5 account, click on it, go to indicator window, search for indicator, you look for relative strength index, this one, relative strength index, click on apply, leave it to default, done, then you apply. Now how do I use this relative strength index? Two things you need to know. The first thing is the overbought territory. The second thing you need to know, the oversold territory. Overbought, oversold. Overbought, oversold. All right. How do I know it's in an oversold territory? And how do I know it is on an overbought territory? And what does that mean to me as a forex trader? When the RSI touches the overbought, this line is the overbought. This line is the overbought territory. The one beneath is the oversold territory. This is the oversold territory line, and this is the overbought territory line. The blue line you see is kind of squeezed, moving up. In between the lines is what we call the relative strength index. Using the relative strength index is important and is helpful to every trader out there who uses this relative strength index indicator. In the relative strength index, it is a theory to it that if it touches the overbought territory, which is the top, it means it's a good time to sell. On the other hand, if it touches the oversold territory, it's a good time to buy. All right. Now, this theory doesn't really work every time. Yeah, sorry to disappoint you. It doesn't really work every time. There are times it works, there are times it doesn't. And this is GBP USD, relative strength index. A lot of people use this indicator, not you, not me alone. We're talking of hundreds of traders out there who uses this same indicator, and hey, it's an overbought territory. Like for here, for instance, this is in another, this one here, overbought. Some traders will say it's a good time to sell. Well, yeah, it did respect the theory. Price did go down. Check it down. Price went down here, down. See that? And if you check for another example, Yeah, like here. Let me point it out to you. Here, price touched, and if you can see from here, yeah, here touched almost close to the oversold territory. So that one actually obeyed the law of the RSI. When it touches, it goes up. When it touches top, it goes down. That's just how it works. But let me show you some. There are times it doesn't obey that law. Trust me. There are times if you think that you will always obey that law, you're in for a disobedient reaction. Now look at this. It's too good to be true that RSI is already on the overbought territory and price isn't falling dramatically fast. Why? Why is that? Did you see that? Did you see that? Do you see that? But hey, come on. It's already in the overbought territory here. Vice versa. You see that? But price did not come down. But what did it do? Price didn't come down. Kept on going, going. It didn't obey that law. Well, how do you overcome this? The key factor to this is patience. It's always been said out there, be patient when trading Forex. This actually happened. You can see, I'm sorry, you can see what actually happened back here, where we were looking at huge buy. You you do not have to just jump into this and start selling. Some will start selling from somewhere here. They were trapped. Some did that here, trapped. Some did that here, but they had to wait a little longer for you to trade back down. At least you got a little profit, but I don't think so. Price went up, but you said RSI is already touching. Yeah, this is the manipulation we're talking about. Now, prices, the banks are after your money. If you don't know how to play the game, you're finished. I would say you're finished. Go back and look at some examples. See how they manipulate chart. The reason why they kept on buying, remember, we're using a 1 minute time frame. That is why. And if you sold here, this 1 minute time frame, the 1 minute time frame is telling you here is an overbought, which is here. Now let's look at another time frame, 5 minute time frame. What does the 5 minute time frame has to show us? Okay, for you to get confused, this is what we're looking at on the 1 minute time frame. Let me take it back for you to see the 1 minute time frame. Okay, you can see that this is the spike. This is what we are looking at. All right, 5 minute time frame. to that. Good. All right. Now, if you check closely here, let me point that out to you. This is the overbought territory we were talking about. This is the same overbought territory we were talking about. Let's move on to another higher time frame, 15-minute time frame. Let's see what the 15-minute time frame has for us. Well, in order for you not to confuse yourself again, let me show you what we're looking at. We're looking at here and here. Now, if you look closely, the 1 minute time frame told you it's in an oversold territory. But look at this. Look at it. It hasn't even crossed yet. The difference in the time frames. You seen that? As we kept on going for higher time frames, the RSI shifts closer into in between the line. Let's see what the 30-minute time frame has for us. The 30-minute time frame. Now, let's see. In order for you not to confuse yourself, this is what we're looking at. Here, sorry about that. Here and here. Okay. You see that? For the 30-minute time frame, there was nothing like overbought. There was no overbought. Nothing like overbought. Check it out. No overbought. Here and here. Didn't even touch the RSI. You see? This is the 30-minute time frame. What does that tell you as a trader? Banks don't trade with the lower time frames. You see? You're doing what the banks aren't doing. If you do what the banks are doing, you'll be fine. The banks are trading with higher time frames. But what you're doing wrong is you're trading with 1 minute time frame. 1 minute time frame will get you anywhere. You can be easily deceived and tricked here because the higher time frames control the lower time frames. Right here, it was an oversold, overbought here. But when we move back to the 30-minute time frame, it's not even close. Not even close to the line. Look at this. But for a 1 minute time frame, it told us, hey, this thing has gone beyond overbought. You're in for disappointment. Very important. Compare the time frames. If you check here, the same thing. Look at what we're looking at. Do not confuse yourself. This is what we're looking at. This area. I'm sorry. Not to confuse yourself. This area here is also what we're looking at. Didn't touch oversold. Overbought. No touching. You see? But the 1 minute time frame is telling us, yo, overbought. So, as a Forex trader, for you to use the relative strength index, you need to compare it with the higher time frames, not the lower time frame. higher time frames. I repeat, not the lower time frames, higher time frames, because the lower time frames won't help you. Higher time frames, higher ones. All right. So let's look at the daily time frame, and let's say the 1 hour time frame. We've seen here it didn't even touch here, didn't touch. The 4 hour time frame, it still didn't touch. So you just have to compare the time frames together. Time frames play a key role when using the relative strength index for you to know when to buy and when to sell. But to tell you the truth, the RSI itself does change, and sometimes, as I've said before, does not obey that law. The law that says if it touches overbought, it will go down. That law doesn't respect it. Take a look at this. Touched. Of course it touched. Of course, touched. Touched somewhere here. You expected this thing to fall, but what happened? All the way up. You see, and this is not just the lower time frame. This is also another higher time frame, 4 hour time frame. Just have to be careful. Now, because this is a 4 hour time frame, you look at another higher time frame, the daily time frame. What do we have on the daily time frame? Will also um, affect the other time frames. Look at the daily time frame. We see a gap here. Let's say, for instance, this gap, the gap we're having here, this one. Yeah, you look down, RSI touched, it still went down. An aggressive selling. Price fell a lot during these days. So what you expect is for price to go up again, which eventually it did. So you'll be looking for opportunities in the low time frames to go for a buy. When you see RSI touching oversold, you start buying. Yeah, because the higher time frame control the lower time frames. All right. If you have any questions about what we've learned today, please leave a question in the comment area. I will attend to it. Thanks for watching. That'll be all for today. Subscribe, leave a like, share, support, and thank you.